right, guys, we're going to get into the big number. It's obviously going to be, what do you think it is, chat? Could it be how old Jerome Powell is? How high Garrett's blood pressure is right now? No, it's non-farm payrolls. That's the big number, everyone. It's coming in hot today. Obviously, the market's reacting. Now, for those who may not know, non-farm payrolls is the measure of the number of workers in the U.S., excluding farm workers and workers in a handful of other job classifications. It is used by organizations like the one and only Federal Reserve to track employment and, more importantly, unemployment numbers in key areas. Garrett, my mans, you were on Trade the Close yesterday.
Mm-hmm.
You predicted that this would happen. Please tell us what you were predicting and now what we're seeing come into fruition.
I forgot. What did I predict?
You said we were going to have you said that the market was going to sell off yesterday. Garrett, that's why we got into a put yesterday and Trade the Close.
Yeah, and now these stocks are up. Like, again, nothing makes any sense right now. I can't, the SPY bounce down, hits the deviation band, starts to rally back up. 513,000, somebody's saying 517,000 new jobs added to the report. Economists who know nothing predicted 185,000, so nearly 2.5x. The unemployment rate, 3.4. So again, the Fed is going to have to start to push this a little bit further. Yet the market doesn't believe the Fed. And so now what is going to happen, you'll probably see some expectations in higher rates, possibly to 5.2. And then the easing will continue. And this divide between the underlying economy and what the Fed must do versus what the expectations are will continue to be a problem. And then we'll go from there. But this is a lot. I'm going to drink some coffee. I haven't had any yet.
Hey,
I don't even know what I'm talking about.
CJ just sent me a chart that we need to put up on screen. CJ, you want to explain this a little bit?
Let's see this, CJ.
There was a big headline this morning. This is the new FOMC board. This is the new FOMC board. That's why good is bad, bad is good. And this is the bizarro FOMC board that is now in place. They installed them last night. After Jerome Powell fell out of bed, he got the pre-read on that number. So this is who stepped up. They're in charge from now on. There you go.
The Qs are reacting the way that I would hope the Qs are reacting. And they're pulling back. They're going lower. But it's probably going to be a bleed. If you're looking for, the way that this market will hopefully behave today. None of those jobs reports were good yet, or earnings reports were good yesterday. Yet the NASDAQ didn't do anything. If you paid attention to the Dow yesterday, the Dow wanted nothing to do with this FOMO rally. So the Qs are now ticking lower, but look for little tiny blips along the way. We'll see if this is the beginning of something significant. I'm kind of hoping it is, because this rally's gone on too long, and I know CJ said that hasn't trusted this rally the whole time.
Oh, well, yeah. For sure. Now, guys, I just want to point out something in the chart real quick. And CJ and Garrett, I think that you'll agree. Now, check this out. If we do not fill this gap, and we kind of went over this yesterday in Trade the Close, we have a gap down, everyone. We have a gap down this morning. If this is a gap and go to the downside, this is going to be a hanging man's top right here. And the last time that happened is here. And then look what happened. Now,
was that December, or was that October?
This is September. Okay. It was on Monday. It was on a Monday. I don't know what the rhyme or reason was. I need to dig into that. But the last time that happened, we continued lower. This gap needs to be filled, or the bears are going to get trampled. There's going to be the bulls are going to get trampled. There's going to be the bear stampede, I guess one could say. Hey, Mark, let's bring you on here. Garrett's looking at the unemployment, the employment numbers right now. How is that factoring into volatility as we are, selling up pretty significantly this morning?
Yeah, well, interestingly, we talked about this on Trade the Close at the end of the day, right? With that rally yesterday, all futures just went straight up all day. The low tick on the VIX futures was about 1830. They ran up to close at 19.5. A 1 point move in the VIX futures in a day on a rally on a day the S&P is rallying is an absolutely massive move. It kind of shows that the top end of that rally yesterday was just short squeeze, and things may be a little overcooked. This is one of those bad is good or good is bad numbers again, and vol futures, as we are actually not getting the massive reaction that we did see out of the NASDAQ. The NASDAQ's down 1.5%. S&P's down about 0.8. Vol futures are only up about a quarter, but they cooked in a lot of this yesterday. So you may not see a big move out of the VIX because a lot of what it was waiting on, earnings and these non-farms, have now been revealed, if you will. But vol is definitely up, and that move off of the bottom in the volatility index was pretty profound and I think telling. And let's not forget the bond market yields are moving very quickly this morning. And if you want to know what could actually cause the market to cascade lower, it would be a yield spike. That would be really problematic for equity markets, and that would absolutely crush the NASDAQ 100. There's no way we can have a yield spike in the NASDAQ not down to 2.5%, 3%.